Our next guest says we're in the later stages of a classic bull market. Andrew Slimmon is a senior portfolio manager at Morgan Stanley. Andrew, we meet in the morning. Welcome.
Unusual for you, Kelly.
Yeah, it's good to be here, and it's good to see you. And you have been, we talked about this before, but, you were part of, you and Joe, you were convincing me you got to be bullish. You got to go with this. But more recently, I thought you were a little bit more cautious. So anyway, how do you feel about the market right here?
Well, the point of this is, Kelly, is that we're following a classic bull market cycle, which is we had 25% correction in 2022. The market was set up for a great opportunity to buy, but the first 2 years, a lot of people sat on the sidelines. The number one pushback I got was, why should I buy equities when I can get 5% risk-free? But in the third year, you move into the optimism phase. I don't hear anyone pushing back saying that anymore. And we're seeing huge flows into equities. Retail flows have been very, very
Andrew,
strong.
You're right. I think when we look at different surveys of U.S. stock ownership, we are at all-time highs. Who's left to buy out there?
Yeah, you're looking at percentage equities, but at the end of the day, there was $8 trillion sitting in money markets. I'm not saying all that's coming into equities, but that just tells you that there's a lot of money on the sidelines. I see it. We run mutual funds. I see it every day. There's money coming in. Now, that's classic first quarter of a year. But the point of this is the next phase after the optimism phase is the euphoria, and that's when the markets die. And so days like yesterday, when I see the unprofitable tech index up 5%, and you got these big volatile stock, very big volatility and high beta stocks, that scares me because that's the sign of the later stages of a bull market.
So when,
I think it's
when
too
you see
early
Meta,
to raise the, it's too early to say, hey, it's over, but it's certainly not early innings anymore.
I almost feel like it's throwing off sparks. So we've got Meta on a 19-day win streak.
Yeah.
We get these moves where it's like, a company pops 30% or it's not just, GameStop is a little bit different story. I'm talking about real companies that are, we're just saying. So do you think they're sort of throwing off sparks in this euphoria phase? Where's the fear and greed index, though? Are we even in greed right now?
Well, what's interesting is, the sentiment numbers aren't very, very good, except I see the flows, and they're very strong. So I'll say, watch what people are doing, not what they're saying, and the flows are very strong. But I would say that the key, kind of signpost of euphoria is not when companies that are doing well fundamentally are going up. It's when there's no logic between what is working, leading the market, and fundamentals. When companies, and that was, you remember 2021, it was SPACs and meme stocks, and these stocks had no fundamentals. And I don't see that quite yet, but we're starting to see kind of what I would call the bubbly signs that it's starting. And that, that gets me worried because
fear and greed
you don't
index,
have to go very, yeah, exactly.
Is it neutral right now?
Exactly.
47. So I don't know if you can kind of be specific off the top of your head, but there are going to be people out there going, what are you talking about? Look at earnings for the Mag 7. Look at the multiples. There's nothing here. What do you see that kind of gives you some concern?
Well, like I said yesterday, we saw the unprofitable tech, biotech. Those are the types of things that, you should be worried about when you see big flows. That is true. Wall Street is a lot more optimistic today than it was the last 2 years. That gets me concerned. And then one thing we haven't seen yet, which would be the big kind of corporate deal flow, that kind of is symptomatic of a bull market also. So I think there's
the IPOs aren't even popping. The one yesterday, and granted, it was interesting to cover it. I forget the name of it. It was SailPoint. And, private equity, there's a sense, I think, amongst the public of we don't need to buy this. This is not a new company. This doesn't have an AI story. But the IPOs lately, even there was a software IPO for construction last year. That didn't do much. What does that tell you?
Well, I think what's interesting is kind of the publicly traded private equity stocks have actually rolled over recently. And I think that's because the Fed is going slower than expected. And I think the speed with which the Fed cuts rate will determine when we get to that euphoric stage. So I wasn't, as an equity manager, I wasn't disappointed that the CPI came in a little stronger, only because I do think a more go slow will extend the duration of the bull market, and we won't get to that euphoric stage quite as quickly as if the Fed were to cut very aggressively.